The number of new residential launches in the first quarter dropped to 4,661 units, compared with 12,006 units in the previous year's corresponding quarter and 10,585 units in the fourth quarter of 2022, data from the National Property Information Centre showed. NAPIC said that the decrease in new launches was in line with the decrease in the number of developers' licenses and advertising and sales permits of new housing sales and renewals approved by the Ministry of Development and Local Government from 564 to 291. Johor recorded the highest number of new launches in the first quarter with 2,077 units, which was about 45% of the total nationwide, followed by Selangor with 791 units. NAPIC added that construction activity slowed down in the first quarter, with the number of completion, starts and new plant supply decreasing by 25.4%, 14.5% and 22.6% respectively against the first quarter of 2022. NAPIC said this is seen as a positive development to balance the unsold supply in the market. Valuation and Property Services Department Director General Abdul Razak Yusak said sales performance of the new launches in the first quarter was moderate at 25.7%, with 1,197 units sold, compared with 35% in the first quarter of 2022 and 43.3% in the fourth quarter of 2022. The number of residential overhangs in the first quarter was 26,872 units worth 18.31 billion, which was a decrease of 3.2% quarter-on-quarter in volume and a decrease of 0.5% quarter-on-quarter in value. Its data revealed that Selangor recorded the highest number and value of overhang in the country, with 4,995 units worth 4.47 billion ringgit. Malaysia has to focus on its long-term economic restructuring plans that will shift its reliance from commodities and low-value manufacturing to higher growth and higher value industries, says Economy Minister Muhammad Rafizi Ramli. He says this as he notes that Malaysia posted a surprisingly solid GDP growth of 5.6% in the first quarter, mainly contributed by the oil and gas, commodity and semiconductor industries. Rafizi explains that through the transition to the digital economy and the energy transition, the less Malaysia becomes exposed to international headwinds and less dependent on commodities and natural resources. Rafizi says that while it is important that the government manages its day-to-day economic performance, the focus really needs to remain on the long-term restructuring. He was talking to reporters after the launch of the Centre for the Fourth Industrial Revolution, Malaysia. The Malaysia Centre for 4IR is part of the World Economic Forum's Global Centre for 4IR network and the first such centre in the Asia-Pacific region. Hosted by My Digital Corp, the Malaysia Centre for 4IR aims to drive the advancement of the digital economy in Malaysia, with a focus on supporting the country's digital transformation and advancements in fast-growth sectors, including green energy. Hong Leong Bank has announced Kevin Lam Sai Yok as its new Group Managing Director and CEO effective July 1st. According to its boss filing, HLB said that Lam will replace Dominic Fuda, who retires on June 30th. In a statement, Fuda said he believed that now was a good time to hand over the leadership of the bank as it embarks on its next phase of growth. Since 2016, Fuda has led HLB's growth by focusing on customer-centric solutions, technology and digital investments and sustainability as HLB's strategic pillars. Fuda went on to say that it has been a privilege to lead the bank through a period of significant digital and technological transformation, the unprecedented pandemic period, as well as the initial stages of the multi-year ESG and sustainability journey. Lam has over 30 years of banking, technology and leadership experiences across regional and international banks in several geographies. Before joining HLB, he served as head of TMRW Group Digital Banking of United Overseas Bank for its key regional markets based in Singapore. Back in KL, he headed the personal financial services at UOB Malaysia and later as its deputy CEO, overseeing the wholesale banking business and technology and operations. Lam said it is an honor to succeed Fuda and that he looks forward to leading the bank to its next phase of growth. He adds that with strong support from the quality and experience management team and the stewardship of the chairman and board of directors, he believes that the bank is well positioned for strong sustainable growth domestically and regionally. Eversendai Corp said it had secured 9 projects worth a combined $1.1 billion in the United Arab Emirates, Qatar, Saudi Arabia, India and Singapore. The construction engineering group says it anticipates a gradual and steady recovery in 2023, with the current backlog of new order books secured and a positive market outlook in key geographical regions where it operates. Eversendai said it had an outstanding tender book of $11 billion with interesting and highly prospective iconic landmark projects, especially in Saudi Arabia and India. Its ongoing projects in Saudi Arabia include the King Salman Park Loop Bridges and O&M Building and Neom Sindala Island Cluster I. Group Managing Director Tan Sri Ekenathan Elumala says the group has embarked on a comprehensive and thorough internal review of cost estimates and margins of all the ongoing projects to ensure prudent recognition of profits and further strengthening operational and management controls. Eversendai had its weakest financial performance in FY 2022 as its net loss widened to $359.39 million from $137.08 million in FY 2021 as COVID-19 dragged its fabrication capacity utilization to a record low of 30%. Full-year revenue likewise fell to a record low of $879.93 million from $1.22 billion previously, a decline of 26.54%. It should be noted that Eversendai's independent auditor, Messrs. Baker Tilly Montero Heng, had expressed concern about the loss-making group's ability to continue as a going concern, according to a May 5th BOS filing, pointing out that Eversendai's current liabilities exceeded its current assets by 168.33 million ringgit. Paper tycoon Oei Ji Guan has emerged as a substantial shareholder in NTPM Holdings with 22.42%. NTPM's filing showed that Oei, who is president and chairman of Indonesia's Sinar Mas Group, bought 251.76 million shares in the company via Premier Investment. The shares were acquired on May 10th by reason of entry into a share sale agreement, according to NTPM's filing, adding that the transaction is pending completion. Prior to this, NTPM's largest shareholder is its chairman and managing director Lee Si-jin, who directly holds 29.05% as well as an indirect 12.33% stake in the pulp and paper company. Lee is also the founder of NTPM. Shares of NTPM have rebounded from a recent low of 33 cents back in November 2022. It closed Monday 9% higher at 49 cents. It should be noted that NTPM, which manufactures tissue paper and personal care products, has never posted any full-year losses since its listing in 2022. For its first 9 months of FY 2023, NTPM booked a net loss of 9.73 million despite an improvement in revenue as higher costs impacted margins.